BPDs.
Is the shortcut for recovery likely to be unfair?
That's another interesting question. The most likely shortcut to a sustained recovery is what we call an unfair mix of orderly debt restructuring and mild inflation. In other words, a transfer from creditors to debitors, debt restructuring, and from savers to borrowers, inflation, is the only way that we see that this could be clean up the balance sheets while maintaining the integrity of the global financial system. So, how long will it normalize the monetary policy? Well, the upcoming cycle is likely to be well below historical norms, and monetary policy normalization will probably take longer than expected. The pace of rate increases, how, in the long term, neutral policy rates are much more important for investors than the actual date, the when of the first tightening move. Clearly, both are likely to be very measured, much lower than in past cycles. The European Central Bank and the Bank of Japan are unlikely to normalize interest rates anytime soon. In terms of the Fed, once the Fed tightening cycle starts, the interest rate differential between the U.S. and the key EMs will strengthen the U.S. dollar and further weaken EM currencies. This is going to reduce the U.S. value or EM's domestic assets and possibly cause will cause breach in loan convenience. So we need to be prepared because the market should take notice. Investors' reaction depends on expectations, and a long period of low interest rates is not priced in at this time. In the long run, long term equities will suffer, bond yields rise, and commodities will most likely fall.